Hello my colleagues, welcome back to the channel, and if you are new here, you are most definitely welcome too. What if I told you there is a way to earn higher returns on your money without taking crazy risk? Something better than just letting your cash sit idle in the bank. In this video, I'm going to break down money market funds in Nigeria, how they work, the top performing options, and what you should know before putting your money in any of them. We'll cover everything from Anchoria Money Market Fund to Stanbic IBTC, Meristem, AMP, and more. If you are a newbie, please stick around to the end so you don't miss any crucial details. This video will help you invest smarter and make better financial decisions. And real quick, if you find value in this video, please smash that like button and share it with just one friend or community you belong to. It helps the channel grow and keeps this kind of content coming your way. And oh, don't forget to also subscribe to the channel and check the link in the description to join my WhatsApp channel where I share early updates on investment opportunities and things I'm researching. All right, without further talk, let's jump right into the video. Let's go. Now, let's start with the basics. What exactly is a money market fund? A money market fund is simply an investment that pulls money from different investors like you and me and then invest that money in low risk, short-term financial instruments. We're talking about things like treasury bills, commercial papers, bank placements, and other secure government-backed or corporate debt instruments. These are not your regular high-risk investments like crypto or stocks. They are more like the less volatile parts of your portfolio, stable, steady, and designed to preserve your capital while still giving you some decent returns. Now, some of you might be wondering, how is this different from just saving money in the bank? Well, here's the thing. When you save your money in your bank account, especially a regular savings account, the interest rates are ridiculously low, sometimes between 3% to 10% per year, and that's if you are lucky. But with money market funds, you are looking at returns between 15% to 25% per annum, depending on the fund and prevailing interest rate in the economy. And unlike fixed deposits that often require you to lock your money away for 30 to 90 days or more, money market funds are much more flexible. You can withdraw your money fairly quickly, note that word. Some funds process redemption within 24 to 72 hours. So you are getting better returns than just a savings account. You also have more access to your money than a fixed deposit, and you are still keeping your risk very low. That's why money market funds are a great option if you want to preserve your capital, earn passive income, or simply park your cash short term while you plan your next big move. Now, you might be thinking, okay, Micah, money market funds sound interesting, but why should I really care? Here's the thing. Most of us keep our money in regular savings accounts, thinking it's safe and maybe even earning us some little returns. But let's look at the facts. GTB Bank currently offers about 8.25% interest on savings. Access Bank 8.175% per annum, and keep in mind that's before tax. Now compare that to some of the top money market funds. Anchoria is giving around 23.69% per annum. ARM is solid 21.72% per annum. That's literally more than double what the banks are offering, and in some cases almost triple. And yet many Nigerians still leave their money idle in their various bank accounts, slowly losing value. Why? Because of one word: inflation. As of April 2025, Nigeria's inflation rate is 23.71%, which means your 100,000 naira today will only be able to buy 76,000 naira worth of goods next year if you do nothing with that money. So even if you are earning 8% interest from your bank, you are still losing value in real terms. Your money is growing slower than prices are rising. But with money market funds returning you 21% to 23%, you are at least keeping up with inflation, and in some cases even beating inflation. So this is not just about making more money, it's about protecting the value of your money. This is why I personally started paying more attention to where I park my cash, not just what I invest in the long term, but where I keep money that could have been otherwise been resting in a savings account. Because the truth is, if your money isn't working for you, it's losing value. So let's get into the real engine behind money market funds. how do they actually work? What's happening behind the scenes when you invest? Let's use Anchoria Money Market Fund as an example. When you invest in a fund like Anchoria, your money isn't just sitting idle. It's put together with other investors' money and strategically invested in low-risk financial instruments. In Anchoria's case, the fund is structured like this. 50% goes to equities, 30% into government bonds, and 20% of your money into money market instruments like treasury bills and commercial papers. These are typically short-term debt securities backed either by the government or strong corporations, meaning they are designed to be low risk, stable, and reliable. So the question is, what does this mean for you? It means your money is working every single day, earning interest from this investment. And here's where it gets interesting. Even though Anchoria doesn't pay you daily, your money is earning returns daily, and those earnings are compounded. So instead of paying you every day, they add those daily profits back to your capital, and that larger amount keeps growing. Then every quarter you get a distribution of all the profits you have accumulated so far. So it's not just steady, it's compounding for you. Now let's talk about assessing your money, because that's also important. You see, most money market funds, including Anchoria, lets you withdraw your money within 24 to 48 hours. Some, especially those with mobile apps, makes it even easier, allowing you to request redemptions online and get your money straight into your bank in a few working days. That said, Anchoria has a minimum holding period of 180 days, so it's not ideal if you need to touch the money within a few weeks. If you try to exit before that 180 days, you may face penalties or miss out on your full return. Money market funds like Anchoria are built for capital preservation, steady growth, and relatively easy access. They are not meant to make you rich overnight, but they are a smart way to park idle cash, beat inflation, and keep your money working even while you sleep. Alright my colleagues, so now you're probably thinking, which money market fund should I go for? Well, let's break down some of the top options in Nigeria side by side so you can see which one fits your goals best. The first money market fund I will suggest is Anchoria Money Market Fund. Anchoria is fast becoming a favorite for investors chasing high returns. They recently reported a 23.69% annual return, which is one of the highest in the space. Here's how they invest your money for you. 50% goes into equities, 30% into bonds, and 20% in money market instruments like treasury bills and commercial papers. I've talked about this earlier on in the video. The minimum investment for Anchoria is 5,000 naira. Returns are compounded daily and paid to you every quarter. Note there's a 180-day lockup period, and pulling out your money early comes with a 20% penalty on the earnings you make from your money as of the moment of pulling out. To invest in Anchoria, I have left a link to their website which you can visit to get info on their money market fund and invest in it, or you can reach out to me on Instagram. I can help connect you with the guys at Anchoria, to help you with investing in their money market fund. Then we have ARM Money Market Fund. If you want easy access and a super low barrier to entry, ARM is a solid choice. You can start with just 1,000 naira. As of late 2024, ARM reported an effective annual yield of 21.72%, which is actually quite impressive. Their portfolio is more diversified. 40 to 75% goes into equities, 25 to 60% in fixed income, and up to 30% in real estate. Returns are tax-free and paid quarterly. It's easy to manage through their mobile app. The risk level for ARM Money Market Fund is conservative, since they still play a bit in real estate and equities, which is the stock market. You can invest in ARM Money Market Fund using the link you see on your screen. I've also left the link in the description and pinned comments. The next and third money market fund we have that is very solid is Stanbic IBTC Money Market Fund. Stanbic offers what you'd expect from a bank-backed money market fund. Solid structure, strong reputation, and convenience. They focus 100% on money market instruments like treasury bills and commercial papers. So it's very conservative and low risk. Their indicative yield is around 20.60%. When you hear indicative yield, it basically means the expected returns based on current market conditions. So it's not a fixed guarantee return, and The same can be said for most of the funds I have covered in this video and the ones that I'm yet to cover. Stanbic offers a minimum investment of 5,000 naira, a 30 days minimum holding period, and 20% penalty if you withdraw within 30 days. It's great for short-term goals and is backed by one of Nigeria's largest banks. You have easy access to it through the Stanbic mobile app. I actually watched a video on YouTube that walks you through how to invest in Stanbic mutual fund step by step. You can click on the card above to go watch that video. That's if you're interested in Stanbic money market fund. Then finally, we have the Meristem money market fund. Meristem is another strong player that's focused on capital preservation while still chasing decent returns. Recently reported a gross yield of 22.05%. Gross yield is total returns you get before any fees like taxes or charges, and they have an effective yield of 20.47%. Effective yield is what you actually take home. It's the return after management fees and other costs have been deducted. Their allocation is super conservative. 57.9% in fixed deposits, 32.3% in treasury bills, and 9.1% in commercial papers. Returns are distributed quarterly and the risk profile is conservative. Stanbic money market fund is small in fund size, just 3.8 billion naira, but it's still regulated and trustworthy. So the bottom line is, if you want high returns and can lock your money away for 6 months, Anchoria money market fund might give you the best returns for your investments. But if you want flexibility, fast access, and a strong mobile experience, funds like AROM or Stanbic might be more better for or suited for you. Meristem gives you a nice balance, steady returns, low risk, and capital safety. Whichever one you choose, remember these funds are not about hype. They are about safe growth and protecting your money from inflation while still keeping it accessible. So that's for that. Let's now talk about the risks and common misconceptions around money market fund, because even though they are marketed as safe, they are not completely risk-free. First off, money market funds are not the same as high risk investments like crypto or stocks. Your capital is generally preserved and the risk of losing money is very low. But low risk does not mean zero risk. Still on the misconceptions, a major one that we have is it is a guaranteed fixed return. No guys, the rates you see like 20% or 23%, those are indicative yields, not guarantees. If the interest rate environment in Nigeria drops, your returns will drop too. So in a falling interest rate period, you might see your money, in money market funds earning less than you expected. Right now, the CBN keeps increasing interest rates, so this affects money market fund interest rate as well. Another misconception is this statement: it beats inflation always. This is another myth, guys. Let's say inflation in Nigeria is around 25% and your money market fund gives you 20%. Even though you are making a return, your purchasing power is still eroding very slowly. So yes, it's actually better than leaving your money idle, but it does not sometimes beat inflation. Finally, the last misconception we have is all MMF are equally safe. This is not true, guys. Some funds invest heavily in commercial papers or lower rated instruments, so it's always worth checking what the money market fund you are investing into invest in, who manages the fund, and if they are regulated by the SEC, the Securities and Exchange Commission. You might also be asking, what's the takeaway here? Micah, are you now saying money market funds are not a good investment? Well, that's not the case, guys. My point is this: money market funds are great for short-term savings, emergency funds, or capital preservation, but they are not a get-rich-quick scheme, and they shouldn't be your only investment if you are trying to build long-term wealth. Don't get me wrong, money market funds play a role in building wealth, a solid one actually, but not the only one. So that's my full breakdown of money market funds in Nigeria, from how they work to how they compare to regular savings accounts, to even the best performing funds right now, and even the risk you need to watch out for. If you learned something new or this helped you in any way, please do smash the like button, subscribe to the channel if you haven't already, and share this video with a friend who might be thinking about where to save or invest their money. And let me know in the comment section, do you currently use a money market fund? If yes, Tell me the one you use in the comment section, and if not, what's holding you back. I've also added useful links in the description, links to the money market funds mentioned in this video. All of them are in the description, and also a link to my private WhatsApp channel. This is a channel, not a group, where I share investment opportunities I'm looking into, research notes and updates before I post them anywhere else. And thanks for watching, and as always, deal.